If you've been watching the news recently, you're probably already aware that the sky is falling. But how will this impact, and how is this currently impacting the Bay Area housing market? Coming up on this Silicon Valley Snapshot. It is no secret that the economy has faced some challenges over recent weeks, yet the Bay Area housing market is proving to be a little bit more resilient than we may have anticipated. And we've got all that data coming up. But if you are currently in the market for a home and you're trying to figure out, is now the right time for me to buy, and looking for a comprehensive data set to assist you in your home buying decision making, you can text the word data plus the neighborhood or the zip code or the area that you're looking in, and we will get all of that data for that specific area sent straight to your inbox. And if you're a home seller in today's marketplace and you're trying to figure out, is now the right time for me to sell? And if it is the right time for me to sell, like what should I be pricing my property for? And all of those types of questions will be answered when you text the word data plus your property address to the number down below. Without further ado, let's dive into it. Let's dive into the data, starting with Santa Clara County. The month of March, we had 876 homes pending and 749 homes active on the market. This is a consistent trend that we saw in February leading into March, where pendings outpaced supply. We haven't seen this in quite some time, in probably a little bit over a year at this point, where pendings have outpaced supply for 2 months in a row like this. And this is a sign of a very strong seller's market. Obviously, in the middle of March, when we had the run on SV Bank, there were some serious concerns, legitimately so. But that seems to have not really impacted the Santa Clara County market whatsoever. Now, I can tell you that I personally have team members writing offers all around the Bay Area, and Santa Clara County is absolutely, at this moment in time, the hottest market, with a very close second being Contra Costa and Alameda County. Both of those counties, the East Bay in general, is pretty hot, but Santa Clara County is just a little bit hotter than it is out there right now. Flipping on over to San Mateo County, we had 372 homes active on the market and 290 homes pending. If we look at the trends from last month to this month, we're seeing a fairly stable market right now in San Mateo County, which again should be great news if you are a home seller, because a few weeks ago, we saw some drastic changes in the San Mateo County market for a couple of weeks after the SV Bank fallout. But all of that chaos seems to have subsided rather quickly. And what we see is basically a net neutral effect month over month, which is a good thing if you're a home seller. And if you're a home buyer, what this means is you know what to expect. It's been 2 months now of fairly stable conditions. We'll see if this plays out or continues to stay consistent. If we see this continue to stay consistent here going into late spring, early summer. Heading on down to Santa Cruz, we have 177 homes active on the market and 111 homes pending. If we look at last month versus this month, fairly neutral, stable market right now from February to March. For sale and pending inventory both going up about the same amount. So we're seeing fairly stable conditions both in San Mateo County and in Santa Cruz County. Obviously, a lot of chaos has ensued. There's been a lot of negativity in the media. Yet in real time, what we are seeing is that the housing market here has been rather unaffected in all 3 of the counties that we've covered so far. Now, let's head over to San Francisco County. San Francisco County, we're seeing 949 homes active on the market and 421 homes pending. This is actually a bettering of the market conditions right now in San Francisco. What we're seeing is inventory levels have come down from February to March 12%, and pending activity has gone up 35%. So we're starting to see that delta decrease. Now, from an economist's perspective, the movement that we're seeing from February to March in San Francisco is that of going from a neutral market in February to that of a seller's market in March, just based on the absorption rate on pending sales. We're seeing a 44% absorption rate here in March of 2023 in San Francisco. Obviously, one of the things that and if you've been watching this channel for a long time, whenever we cover San Francisco, it's always the tale of the haves and have-nots. And even in this kind of market with an absorption rate of 44%, what you're going to find is that there's going to be a lot of properties that sit on the market for 2 or 3 or 4 months. And then there's going to be the properties that churn quickly, like 1 or 2 weeks. And those are like the best properties, right? So the best houses that are marketed correctly, that are priced correctly, are going to sell very, very quickly in this market right now in San Francisco. everyone else, the ones that like maybe aren't in a great area, or they're not priced correctly, or they're marketed very poorly, or it's not really that great of a house inside, it needs some work done up. Those are the properties that can sit and sit and sit and sit for a very long time. So be interesting to see how San Francisco reacts over the next couple of months. Obviously, we're seeing things trending in the right direction for the city. But as we've seen in the past, sometimes those trends can be short-lived. So let's reserve judgment for a couple of months from now once we have some more data. But so far, so good news for San Francisco. Now heading on up to Contra Costa County, we have 809 homes pending and 683 homes on the market. And what this means is that for the first time in quite some time, in a year to be precise, we're seeing pendings outpace supply in Contra Costa County, which if you are a seller should be great news. It just means that we are in an extreme seller's market. You know, anytime that pending sales are outpacing supply, that is good news for home sellers. And finally, heading on over to Alameda County, we have 728 homes pending and 641 homes active on the market. And again, for the first time in a year, we are seeing pending activity outpace supply. That is great news if you're a home seller. And that should also be very eye-opening to those who think that the market is going to be impacted by all of the things that are going on. We are in the thick right now of a negative media storm that is, quite frankly, like very just depressing to watch. But if you are paying attention to the real data and the real facts, the truth is that right now the Bay Area housing market has not been impacted by all of the negativity. It has not been impacted by these extraneous economic factors. Now, will that change in the future? Well, I guess that remains to be seen. One of the primary concerns, or one of the primary talk tracks right now that we are hearing from the consumer right now, is with all of the layoffs that are happening in the Bay Area, how that's going to impact the landscape of the Bay Area housing market. Well, I have some thoughts on that. First thought goes to how many of those jobs as a percentage equate to people that are currently in the marketplace right now to buy a home. If we had to put a number on it, I would estimate that perhaps no more than 5 to 10% of the total workforce could be laid off. And of those 5 to 10%, like even if that translates to like say 20% of the active buyers that are looking right now, well, that's not a big impact when we really think about how many offers we're receiving on properties right now. We just put an offer in on a property yesterday, my team did, where there were 50 offers on the property. So if we went from 50 offers to 40 offers, what's that going to do to the price? It's not really going to do much to the price. Not to mention that the main concern with layoffs, the main concern with job loss is that that is going to instigate a recession. Well, if you have watched this channel for a long time, you'll know that recessions tend to lead to stronger housing markets, meaning we tend to see home prices appreciate during recessions. And the reason for that is typically the Fed will decrease interest rates during recessionary periods to stimulate consumer spending. And when that happens, what we are left with is a bunch of buyers who were once not able to buy now being reinvited into the marketplace by the lowering of interest rates. And that usually supersedes any job loss, or that increased demand usually supersedes any demand that was lost due to job loss. And so obviously I don't want to diminutize the impact of job loss. These are real human beings with real lives and real families. And so as an analyst from the outside looking in, it seems to me that this job loss, that these layoffs really won't have a massive impact on the housing market unless we see these layoffs also impact inventory, in the sense that we see inventory levels start to rise dramatically. If the inventory levels rise and we see demand start to go down, that simultaneous loss of demand and increase in supply could have an impact on the housing market. So that remains to be seen. There's definitely some arguments for and some arguments against, but you can rest assured that I will continue to bring you the latest information and the latest data when it comes to the Silicon Valley and the entire Bay Area housing market. If you've made it this far in the video and you are not yet subscribed, what are you waiting for? Click the subscribe button, hit that little notification bell, and give us a thumbs up. It costs you nothing, and it helps me get in front of more Bay Area home buyers and sellers just like you. This is Danny Gould. I'm selling Silicon Valley, and I will catch all of you in the next Silicon Valley Snapshot.